Hey, Saretsky here. As always, Canadian real estate market update with particular focus on Vancouver. If you're getting sort of value and entertainment out of these videos, all I ask you hit thumbs up and subscribe. Questions, comments, put those below. I wanted to touch this week's video on really just a Vancouver housing update for the long-time subscribers that were originally here just for the Vancouver content. I haven't done really like a Vancouver specific video in quite a while. So I just wrapped up my latest Saretsky report. Again, 10 pages, completely free, 10 plus pages, completely free on my website at stevesaretsky.com. You can go check that out. But I figured since I had just come fresh off that report, I may as well put some of my detailed thoughts here in a video to you. But if to kind of sort of frame this week's video up, you have to go back to 2021, which was, okay, we finished the year, 2021 marked an all-time record high in home sales, surpassing the previous high that was set in 2015. Again, if anyone remembers 2015, that was, the peak foreign inflows, crazy housing market, people demanding foreign buyers taxes, money laundering inquiries, throwing out the BC Liberal government, which was in power for, 2 decades. Crazy. And then, what, a year later, we got a mortgage stress test that's come into play. And, if we fast forward to today, again, 2021, here we are. And government policymakers, et cetera, nobody's talking about any really new policies. It's kind of like they've kind of tried everything. And the only thing that every level of government now is talking about, whether that's the Bank of Canada recently, OSFI, which is the Canadian banking regulator, the BC provincial government, everyone's just talking about housing supply. And so it's almost like they've kind of thrown their hands up and said, okay, that's what we're going to focus on now. We've kind of tried everything else. And again, right or wrong, I mean, my view has always been, yes, housing supply, we have been underdeveloping or underbuilding here. But at the end of the day, it's pretty hard when banks can ultimately issue credit faster than builders can build new homes, it becomes difficult to build enough housing supply, particularly when you're in a speculative frenzied mania as we are today. So we had record home sales in 2021, which started off the year with record low inventory. So you have this whole cohort of buyers that were still trying to get purchases done. They've been unsuccessful the last 5, 6, 7 months getting outbid on all these properties. And so January started off very few listings. Any listing that came to market, all these buyers were jumping on. And so we finished January here where inventory fell on a year-over-year basis by 37%. Now again, sometimes there's base effects. We know base effects are going to be important to consider as we move forward later on this year. But if we kind of pull back the whole picture, you can see here that this is actually the lowest inventory that we've had for the end of January in over 20 years. So if you took strictly how many homes are on the market for sale as of the end of January and go back 20 plus years, we're currently at the lowest levels on record. And so you know what that leads to. It leads to bidding wars. And if we look here, we have 44% of all homes in Greater Vancouver sold above the asking price in January. And what we've seen basically is escape velocity on home prices. This isn't yet showing up in the MLS benchmark price because that's ultimately a lagging indicator, as I've talked about before. That benchmark indicator can lag by 4 to 6 months. It basically takes like a rolling average. And so I would argue that from a feet on the ground perspective, if I'm running a comparative market analysis, some sales comps, etc., trying to advise a buyer or a seller, I would argue that in the last 6 weeks alone, home prices have increased by about 10%. And again, you can take that as you will. You can make your judgment calls, but that's my honest perspective is that you've had this escape velocity. I think the market has gone completely out of control. I actually think it resembles very much like 2016, because if you remember, December, January, February of 2016, the prices just went completely parabolic, and that was kind of your blow off top before the market actually just exhausted itself in April of 2016, well before the foreign buyers tax. The market had actually just exhausted itself. The buyers just kind of went on buyer's strike and just kind of hit the pause button and said, you know what, I'm out. And it was about a couple months later, then the foreign buyers tax came in, and it ultimately just completely put a damper in the housing market. So I kind of feel like we're getting closer and closer to that moment, that pivotal moment, where again, I think I could easily see the detached housing market topping out in certain segments this year. And then if you look at it, as we've talked about before, it's the condo market. I've actually been writing about this for the last 6-7 months in my Saretsky report, that the condo market is the laggard and it is going to outperform the detached segment this year. And we're already seeing that, condo months of inventory, if you look at it, has really been in a straight line down since the middle of 2020, and we're now at two months of inventory on the market, 2 months of supply, where right now you've now got condo prices up 14% on a year-over-year basis and growing very, very quickly, because you have to remember this is all basically trickle down, right? And when detached prices go up 20, 25, 30, and in some cases 40% in a year, people look for the next best thing, and so they push the prices of the townhouse market. And when they can't get that, they say, I got to get something. I got to get anything. And even if that just means I'll buy a 1-bedroom condo and rent it out, and I'll just delay my primary residence purchase a couple of years until the market kind of settles down. That's what they do. And so that's where you can see the strength in the condo market developing. Again, I think it outperforms this year. But the thing that I'd like to highlight, and I've highlighted in the report here, is really just the suburbs, because I think that's, people always say, oh, Steve, should I buy? Is now a good time to buy? And I go, well, what are you buying? Where are you buying? And what price point? Because again, if you're buying, a condo in downtown Vancouver, guess what? The price hasn't moved since 2018. It's flat. So, I would argue that's your value play in today's market. Now, if you're buying a house in the suburbs that over the last 2 years has effectively doubled in price, I don't know. Is it the best time to buy? Would I be buying? I probably wouldn't. And so, if I was, I would be certainly looking at it from hey, this isn't necessarily an investment play. This is somewhere I'm going to house my family for the next 10 years. And, there might be a little bit of gain, there might not be. That's how I would be looking at it. If you're strictly saying, hey, listen, should I buy a house in the suburbs that I can flip in 24 months for more money? I would say, hey, all the power to you. Good luck. So that's kind of how I always look at the market. But if you point out the suburbs right now, you've got, I'm just going to show this chart. So 70% of all homes in the suburbs have gone above the asking price as of the end of January. If you look at this price chart for detached homes, since the start of the pandemic, homes in the Fraser Valley have increased since March of 2020 to the end of January 2022. The typical home, which is what the benchmark measures, has risen by $581,000 as of March 2020 to the end of January here 2022. They're up something like 40% on a year-over-year basis. That's a similar story for the townhouse market. This is the market that concerns me. And ironically enough, we actually had the Canadian banking regulator, Peter Rutledge, with OSFI. So again, OSFI, the Canadian banking regulator, Peter Rutledge, head of the banking regulator, was on a podcast just this week actually talking about his concerns and how he's viewing the market for a potential 10 to 20% correction in some of the markets. So let's clip that to Peter's thoughts right here.
It's become for a lot of players an investment vehicle more than shelter, right? This is now if you were thinking in Canada about where you'd want to invest your money to get the best return, you might not be thinking about a innovative new industry. You might not be thinking about a manufacturing company. You would most likely be thinking about real estate, would you not?
Certainly that's the case. Empirically, that is the case over the last 2-3 years. There has been a speculative increase in buying power in the housing market. Is that crowding out other investments? Maybe a little bit over the last few years. Probably not going forward, to be honest. With rates going up, with the general recognition that, housing is pretty fully valued, I'm not sure your expected return in the housing sector is, I think a smart investor would think twice and maybe look at other outlets.
Well, I'm trying to get at, Peter, where's all the money coming from? These prices, the supply argument that you made about immigration makes perfect sense to me. and John Webster made it on the
Yeah.
show too, and it makes a lot of sense to me. But it doesn't explain the run up in the last couple of years, which is obviously driven by some other dynamic. The incredible explosion of prices in them everywhere,
Yeah.
but the major urban cities and then the exurbs. And I mean, to me, I don't know how people are still affording these houses and yet they're still being sold. So where is this pool of money to buy houses to pay, twice what a house cost last year?
Well, there's again, it's not a single thing. First of all, savings are up. House prices have been rising for a very long time, so there's a lot of embedded gains in home prices. So there's a source for the equity. Layer on top of that, a residential mortgage credit system that has extraordinarily low delinquency. And so if you're a bank and someone walks in and wants mortgage and your delinquency rate is 0.17%, you probably that's a pretty high quality loan. So credit's very available. Layer on top of that, interest rates are low. Layer on top of that, herd mentality around the speculative sector where folks say, well, I can get a quick loan. I have equity built up from my savings or maybe from my first house. I can go get a quick mortgage from the bank and it's not terribly difficult to get. I'll go buy this house down the road. Maybe I'll fix up the kitchen, do a little landscaping, slap a new paint job out front, and then I'll flip it 6 to 8 months. And there is a speculative fever that takes over private markets, and that's what's playing out. Looking ahead, it feels like we're at the latter stages of that phase. And my expectation is that as rates go up, assuming they do, some of that fever is going to abate a little and you'll see a slowdown in prices. In some markets where you had a really rapid increase in prices, you could see a fall of 10, 20% even. But that'll just be a return back to, I wouldn't say norms, but a return back to a little bit more sanity after a sudden buildup in prices. And by the way, we went through that in Vancouver in 2015, 2016, and in Toronto in 2016, 27. And you're talking peak to trough declines of 10 to 20%. So we can absorb that volatility.
So it's not often that I will agree with the political entity in Canada, but I think Peters has made some very valid points. I think there's a lot of speculative frenzy. I think this reminds me very much like 2015, 16 type. I actually think this bull market is actually more intense. If you look at what's happening, where is the price growth, right? Like, again, let's look at this market. This is a different market than 2015, 16 because that was driven, I would argue, by a significant amount of foreign capital inflows. The market took off in the high-end luxury market. The price growth really ramped up significantly in West Vancouver, in the mansions and the British properties on the west side of Vancouver. Homes that were trading at $4 or $5 million were being flipped, 2-3 times in a year in several years. Went from $4 million to $5 million to $7 million. That was that sort of foreign capital coming in. If you look at what's happening today, the price growth is overwhelmingly in blue-collar suburban neighborhoods because this market has been predominantly driven by locals absolutely binging on cheap credit, moving further away from the city core because, they're working from home, they want more space, and they've arguably gone, in my opinion, inflated the suburbs. So this is a much different market driver today. As Peter talks about, where's the money coming from? I keep getting this question. Hey, where's the money coming from? Where's the money coming from? Just did an interview with CTV News the other day. Where's the money coming from? It's coming from the existing asset base that's been propped up by central banks, right? If you increase your money supply by 23% over the past, 2 years, all currency in circulation, you've boosted the asset prices, not only in the stock market, crypto market, the real estate market. What you're seeing is people are opting to basically refinance properties. So, for example, the boomers that have already made $1 million+ on their primary residence they bought 20 years ago just went up another $1 million in the last 2 years alone. They're now saying, hey, you know what? I got to get little Johnny into the property market. And so what they're opting to do is saying, hey, this is an advance on your inheritance. You know, take a little bit of your inheritance money today. Here's $200,000, Johnny, go bid up the townhouse in Surrey. And that's exactly what they've been doing. So again, it's kind of that has versus have nots. The people that are in the market, the families that are already in the market and that have built up that equity, you know, from no necessarily smarts of their own per se, but perhaps you could call it dumb luck. Hey, I bought a house 25 years ago and it paid off. They are sprinkling down that wealth. And so it is this wealth transfer. And again, these are going to have very interesting societal and political impacts, you know, down the road at some point. But that's just what it is. That's the game. I didn't make the rules. I'm just certainly, you know, I'm just an observer here on the sidelines. So, or not necessarily on the sidelines, but I'm an observer. So it is what it is. I hope this housing market update here in Vancouver helped you. People, I do get this sometimes, like I think people say, hey, you know, I just see this guy in the news or on YouTube, all this stuff, you know, and people are sort of hesitant to reach out. Again, if you've got real estate related questions, if you need help on the servicing side in the Vancouver housing market, don't hesitate to reach out. You know, I run my business certainly on all referrals. You guys know where to find me. So if you have real estate related questions, if you do want my services, whatever, this is not a promotion, you know where to find me. Always happy to chat. No strings attached. See you next week.